Welcome to the Weekly Trend Trader, How to Do Trend Following. As usual, we're going to look at three regions of the world. We're going to look at the Asian markets, the European markets, and the markets in the USA. Don't forget to subscribe. If you have subscribed, thank you very much for your support to the channel. Also to like this particular video and share it with your friends, because you may have those who want to start a trading business, whether that be part-time alongside what they're doing or a full-time trading career. The strategy that I'm teaching you works very, very well with that. Also, don't forget that notifications bell, because it's only by hitting that notifications bell along with subscribing that YouTube can alert you that we've released the latest video. And the information that I'm sharing with you, of course, is time critical information. So go ahead and hit that notification bell too. So let's start with this week. Well, what a week it's been. Let's have a look at the Asian region. The whole world has had a massive sell-off this week. The expected correction that we've been talking about for the last couple of weeks began in earnest with high volatility and a global sell-off. But let's look at this Asian region. Let's look at the Hang Seng. First indicator that we had there was that the 52-week moving average was falling. Let's look at what's happened this year, just to look back at the strategy. So January 2020, we had that set up there from December going into January, the end of last year into the beginning of this year. We had a multiple week run up, which gave us the setup, that multiple week run up. Then we had that bar there in January that went from 29,000 and dropped all the way to 28,000. The lines crossed there, giving us the setup. Market dropped down to the swing low of 26,000, ran back up to 28,000, and then absolutely collapsed with the COVID situation and the slowdown of the economy all the way to 21,000. Market bounced off that level, tried to recover there, ran all the way up to 24,500, the swing high where we took our profits. The market dropped back to the swing low there in May. We can see it got all the way down there to 22.5, and then it bounced from there and tried a recovery. That recovery that it tried to do there, the Hang Seng, ran all the way up until the beginning of July, where in the beginning of July we ran right up to the 52-week moving average. And look at that bar there, the first week in January, we ran up and we tried to test that level of 27,000. As we got up there, we experienced price rejection and heavy selling, and the market closed at 26,700. The market dropped back there, and it's been in a small trading range for the last few weeks between 24,500 and 25,500. But what's happened this week? We had heavy selling, once again, price rejection at the falling 52-week moving average, key level, falling 52-week moving average. We tried it in June, we tried it again in August. This week we saw heavy selling along with the rest of the world. Market closed at 24,600, and I think this is the beginning of the correction. So that's the Hang Seng. Let's move across and see what's happening in China. So here's the Chinese market, the Shanghai Composite. Very interesting one here. Let's just go right back a minute and look at a couple of lovely little setups that we had. 2018, you can see a double bottom there in October and December of 2018. Lovely little double bottom that resulted there as a low testing pin bar at 2,500. Bought that one. Lines crossed the week after. Lovely run up. Market ran all the way up to 3,100. Where the lines crossed again and we took our profits. Lovely little trade. But then what happened after that? Look at the 52-week moving average. 52-week moving average is totally flat, running straight through the price action, which tells us there's nothing there for us. Flat 52-week moving average running through the price action. The market's flat, and as we can see there, ranging. But what happened this year? Well, let's have a look at the last couple of months. So we had this situation in June where we broke out of that range that we had been in and closed at 31.50. Week after, we put in another high all the way up to 34.50, where we had price rejection. We closed there at 3,400. Week after, again, a very volatile week, but we tested that 34.50 level again. Price rejection was there, sold the market right back to 3,200. Week after, again, we tried to move higher on the Shanghai Composite. We couldn't do that. We closed again at 3,200. Then there was a slow grind higher, back to that 34.50 level where we were 3 weeks ago. What did we experience? Price rejection. Last week we had a low testing pin bar where we tried to get some traction back to the upside. This week we tested that 34.50 once again. The sellers came out, price rejection, and we closed at 33.50. But look at the lines, look at the moving average, the 2 and the 4 very close to crossing here. If we get any further selling, the market will start to drop away, the lines will cross. That will be our signal that this market really is going down. We've got heavy price rejection at 34.50. It's a heavy level of resistance. I'm expecting the market to continue selling around the globe, and we see the market pull back from here. So that's a Chinese Shanghai Composite. Let's have a look at Japan. So here's the Nikkei in Japan. We look at this one, look at the 52-week moving average. 52-week moving average, pretty flat there, running right through the price action. If we look just back at this year, look at December and January, we can see 24,000. There's a little double top there at 24,000. Market collapses away. It's the COVID situation. It drops all the way down in March, down to 16,500. There in March, if we look at the RSI, we can see an inverse head and shoulders. That inverse head and shoulders, remember, is in a reversal pattern. It tells us the market is going to go the other way. The head is at the 20, which is very oversold. Tells us the market is going to reverse. Very, very oversold market. Inverse head and shoulders. We buy this one long in April with the lines cross, and we get April, May, June, July, and then in July, the lines cross again, and we take our profits at 21,700. Lovely reversal trade. Then there's this little bounce that we get in July off the 52-week moving average that is starting to try and rise there. We hit this level of 23,500 this week, but we've got a high testing pin bar along with stock markets around the globe collapsing. So very, very interesting level here for the Japanese Nikkei. Stock markets around the world collapsing, high testing pin bar, 23,500 is a level that we failed to be able to close above for several weeks in a row. Let's see if when the rest of the market starts to sell off, whether the Nikkei too will really fall on selling and profit taking from the March lows. So that's the Nikkei and the Asian region. Let's go across and have a look at Europe. So as we look at Europe, let's start our look by looking at the FTSE 100 in the UK. FTSE 100, look at the price action there, look at the 52-week moving average. Totally flat until January and February of this year. January and February of this year, look at that level there at 7,600, where it was tested back in July 2019, tested again in December and January of this year, and then it failed at that level. We got a sell signal, the market fell away and collapsed all the way down to 4,900, where we saw the market recover. And as it came back up, we took our profits at 5,800. Lovely trade. But there in March, we can see there's an inverse head and shoulders. Again, with the head at the 20 level. 20 on the RSI is very oversold. So this is saying to us, reverse this one. This market's oversold. There's a buying opportunity here. So we reverse this one at 5,800 long. And the market goes up all the way to the swing high, which is in the end of May and the beginning of June. End of May, beginning of June, we get up to 6,500, and then we experience on that red candle price rejection. Market goes sideways for a little bit there, and then we finally get our signal to take our profits right there in the middle of July. Lovely little trade there. But what's happened really when we look from May, June, July, and this month, what do we see? We can see a downtrend. Look at the 52-week moving average. The 52-week moving average, right there from February where we had the sell-off, has been falling. But the price action hasn't been able to get above that falling 52-week moving average. And now we're seeing more and more selling. This week we had a candle that opened at 6,000 and dropped to 5,800. This European region has been very weak. The correction has already begun there, and America now is catching up with the correction that started in Asia and Europe, and now the USA is now correcting too. So the FTSE 100 is looking weak. We expect further selling as this correction continues. Let's take a look at France. So let's look at the French market, the CAC 40. Let's look at this year. Look at that on the chart there, very clear to see. 6,100, there's a double top in place there. From that red candle at 6,000, we get an opportunity to short this one. The next week, lines cross confirming everything for us. The trend is down. We follow that trend. The market drops all the way down to 3,600. On the bounces there, slight recovery. As it goes to the swing high, we take our profits at 4,600. Lovely trade. Then the market drops back to the swing low. You can see that there on the chart, and on the RSI in May, and then the market starts to turn again. 4,400, another opportunity to buy this one. So we buy this one at 4,400. The market trends as we're going long. This is a recovery from the heavy sell-off that we saw in March, and the market continues to move up, and we go all the way until July, where we get an opportunity to take our profits. But have a look at what's happening here. Here's the key level, the 52-week moving average. Have a look at that 52-week moving average from February. It has been falling. We tested it in May and saw price rejection. We tested it in July and saw price rejection. We tested it again in August twice, even this week, last week, and we've seen price rejection. We cannot, on a weekly closing basis, close above that 52-week moving average, which is a sign of weakness, that we could just continue to drift lower from here. Look at the RSI, totally flat there on the 50 median average. Something is about to happen here, and I think the market now is due to correct more to the downside. That's the French market. Let's go across and look at Germany. So here's the German DAX. If we look at this one on the RSI, January and February, we can see a double top there on the RSI. Then we look at the chart. We can see where the market's falling away, 13,500. Market breaks away, gaps away that week. And we look at what happens that next week. Lines cross, giving us a clear signal. The trend has changed to a downtrend. The market begins to fall away, and it falls all the way down to 8,300, where the market does a bounce, starts to recover, and as it recovers, the lines cross, and we take our profits at 10,500. Beautiful trade. But there's more money to be made. Look at the RSI in March. RSI in March, there's an inverse head and shoulders there with a head at the 20 level. Now remember, 20 is very overbought. 80, very oversold, sorry, 20. 80 is very overbought. So we've got a very oversold market here. Inverse head and shoulders telling us to reverse this one. We've just had a lovely winner on the way down, and there's another opportunity on the way up. So we buy this one long at 10,500, And the market goes right there from April. We get April, May, June, July, and in July we take our profits at 12,300. Lovely trade. But look at the situation now. Market's gone and climbed a little bit higher. We've got to 13,500. We cannot seem to close on a weekly basis above 13,000. However, this week we had that high testing pin bar and again didn't close above 13,000. This is a very, very key level that we cannot close above 13,000. This is now saying to me, there is a correction here. This market is going to correct. We've had a fantastic run up from the March lows, but we've gone too far, too fast, and we need to correct. And that's what we're seeing the markets do. This is the expected correction that we've been talking about on these markets for the last few weeks. So that's the German DAX. Let's have a look at Spain, the IBEX. So here's the IBEX in Spain. Again, look at January, February, look at the RSI. This one here, really clear, double top on the RSI in January and February. Then in February, look at that high testing pin bar at 10,000, which is a round number. Three things here say sell this one. Double top, high testing pin bar at a round number of 10,000. Market says sell, sell this one. Sell this one, market gaps away the next week and the lines cross, confirming that we are now in a downtrend. The market drops all the way down to 5,800 and then it does a sideways recovery until May where the lines cross, telling us to take our profits, and we're out at 7,100. Fantastic trade, rewarding your patience on that particular trade. The market moves up there from that swing low. We move up and we try to test the 8,000 level. We get to 8,000. What happens when the price gets to 8,000? We see price rejection, heavy selling that week, and the market closes back at 7,200. Look at that falling 52-week moving average. We're not able to get on a closing basis anywhere near that falling 52-week moving average. May and June, we got to 8,000. The 52-week moving average continues to fall, 7,600. We tested that in June. We couldn't take it out. We tested it in July. We couldn't take it out. Now, August, we're nowhere near there. We're having some weakness at 7,200. And this week, we moved from 7,200 and closed at 7,000 as that 52-week moving average continues to fall. This is a real sign of weakness, that the market is going to either trade sideways here, which they do sometimes in a correction, or the market is going to fall more from here. So that's the IBEX. Have a look at the RSI. Remember, above the 50, between 50 and 100 is a bullish bias. The market's going to move up. Below the 50, between 50 and 0 is a bearish bias. The market is weak, negative. The market is prone to fall. And look where we are. We cannot get above on the RSI that 50 level. That is a sign of weakness. Let's move over to Italy. So here's the Italian market. Again, clear double top on the RSI. We've got several things here again. Double top on the RSI, high test in pin bar at 25,000, which is a round number. Those three things, double top, high test in pin bar at a round number 25,000, tells us to sell, sell, sell this market. We do that, the market collapses away with a gap that week. Market opens at 24,000 the next week. The lines cross. The market absolutely collapses. The COVID situation, the slowdown of the economy, and we take our profits as this one recovers at 17,500. But look at what the Italian market's tried to do. If we look at the swing low, it built a base there at 16,500. Built a little bit of a base, then the market started to climb again from 17,500. The market ran all the way up to July. In July, the market tried to break out and close on a consistent basis above the falling 52-week moving average. The market got all the way to 21,000. But then what happened? It experienced price rejection. And the market fell back. Not just that week, but the next week we had follow through and continued selling. Then the market's been in this tight range between 19,000 and 20,500. It's in that tight range and we haven't been able to break out. This week we've seen further weakness. The market opened at 20,000 and closed at 19,400. But look at that pattern that's there. It's the pattern that says to me, this one is screaming and telling us what is going to happen. Look at that head. At 21,000, there's the head. Look at that left shoulder at 20,000. Look at that right shoulder at 20,000. There is a clear head and shoulders pattern on this chart. The neckline is at 19,000. If we see that neckline break, we're going to see much more selling as this market corrects back to the downside. That is a very, very clear pattern. We're just waiting for the neckline to break. Because if the neckline doesn't break, then this could just trade in a range between 19,000 and 20,500 and stay in a range for a long period of time. That's one option. The other option that could happen here is that the neckline breaks and we see a bit of a sell-off in Italy. So that's the European markets. Now, if you're really enjoying what we're talking about here and what I'm sharing with you, show your appreciation by just subscribing. It means a lot to us here and we really appreciate your support if you're already subscribed. Don't forget to like this particular chart as well, because each particular chart, YouTube use that to see whether this chart, this particular video is worth showing to other people and whether they could benefit from it. So go ahead and like that, and that will help us out too. Share this with your friends, because there's lots of people, particularly in this COVID situation, who have perhaps lost their job or looking for something else or looking for additional income, or they've got a partner who wants to work. This strategy lends itself very, very well for people just doing this on a part-time basis and making quite a bit of money from trading financial markets. So go ahead and do that too. Also drop us your comments if you're new to trend following, if you're about to take your first trend, if you've ridden a trend for many months and you've caught that, let us know how you're getting on with your trend following. Okay, let's continue. Let's move over to the USA region and let's start by looking at the Dow. Well, what do we see here? January and February, look at that double top there. Very, very clear. 29,500. There's the level, January and February. Double tops in place. There's that red candle telling us to sell this at 29,000. We sell this one. The lines cross confirming everything. And the market absolutely collapses away there all the way to 18,000. Market there tries to stage a recovery. And it does stage a little recovery, and as it starts to recover, the lines cross again, giving us our signal, and we take our profits at 23,500. But an interesting thing happens in March. Look at that clear inverse head and shoulders with the head at the 20 level that we can see on the Dow. Very, very clear inverse head and shoulders, telling us to reverse this one. You've banked your profits from 23,500 on the fall, but go long and make even more money. So we go long at 23,500, and this one runs all the way until June, where we take our profits at 25,000. Then we get another opportunity again, bounce in June. You can see that on the RSI. There's the bounce off the median 50. There we are, we're in at 25.7. We buy this one long, and until this volatile week that we've just had, the market swinging around, we expect perhaps next week to get the line cross where we will take our profits. That's the Dow. Let's have a look at these volatile markets that we've had in the USA this week. Volatile candle we can see there, but let's go look now at the S&P 500. So here's the S&P 500. A little bit different to the Dow in the sense that we can't see in January and February a double top on the chart. We can't see a double top on the RSI. That's why it's very, very important that you check the region. I'm always trying to stress this, check the region. If you're trading Europe, what are the rest of the markets in the European region doing? If you're trading Asia, what are the Asian markets doing? Check the region. So here, there's no double top on the chart. There's no double top on the RSI, but check the region. Dow's got a double top on the chart. Check the region. Nasdaq's got a double top on the RSI. So that tells us what's going to happen. Tells us that we should be selling this one. We sell this one at 34.50 and 33.50, and the market absolutely collapses away all the way down to 2200. Then we've got that inverse head and shoulders, very, very clear. Tells us to reverse this one. We take our profits at 2800 from the fall. We reverse the trade, buying it long at 2800, and it's been an absolutely amazing trade. Bought that long at 2800, not had the sell signal yet. However, this first red candle that we've seen this week, with that look at the volatility there, it went all the way up to 3600 and all the way down to 33.50. Huge range of volatility this week as people try to make up their mind. Is it going higher? Is it selling off? They're not quite clear. They're going to make up their minds, and I expect that this will fall to the downside. Again, maybe another volatile week next week, and we will take our profits. Let's move over to the Nasdaq. Here's the Nasdaq now. As we talk about, check the region. Look at the RSI on this one. There's the double top on this one at the 80 level. So we've got January and February, double top at the 80 level. We've got a high testing pin bar at 9,500. There's four things that say sell this market back in February. Double top, firstly, on the RSI at the 80 level. 80 is overbought. Then we've got a high testing pin bar. Then we've got 9,500, which is a round number. All those four things together is an absolute scream from the market saying, sell, sell, sell this market. We sell it at 9,500. The market gaps away. Next week, the lines cross. The market collapses on the COVID situation. The market drops all the way down to 6,500, where we bounce. The market recovers. And as we get to 8,100, we take our profits. Absolutely fantastic trade. But there we can see in March, there's the inverse head and shoulders telling us to reverse this one. You made good money on the way down. Reverse this one. Make money on the way back up on the recovery as well. So buy this one at 8,100. And the market is still going up until this very volatile week that we've had. The market has been so bullish, absolutely amazing. Many have been surprised by the strength of the buying power and the recovery, when really the Fed has been pumping money in to support these markets. But right now it looks like the expected correction is about to begin. Look at the volatility. We had the market go up to 12,000, this Nasdaq, down to 11,000 in the same week. Very volatile week, closed with a bearish engulfing candle. But I expect next week will be volatile too, but I expect us to close to the downside. So we spoke about a lot of things here, inverse head and shoulders, double tops, head and shoulders, where do we buy, the lines crossed, the 52-week moving average, a lot of things that may be confusing for someone who's new to the channel. If you're not new to the channel, you totally know what I'm talking about. But if you are, then I'm going to pop up here a strategy video. Watch that strategy video because it will help you understand exactly what I'm talking about. And each week you can build upon what you learned the week before as I go through the markets and we see and spot opportunities together. If you like to trade stocks more, there's also a momentum video, which I'll pop up the latest one there. And that's about momentum trading. If you like to trade stocks, a slightly different strategy, but it's based on stocks. So fantastic week. I'm absolutely looking forward to what happens on the markets next week. Thank you for watching. Until next week, take care.